So the Bank of England started as a war loan and ended up controlling the price of money for an entire nation. By the late 1600s, England had a serious issue. It was fighting France, funding a navy, and fast running out of money. Taxes just weren't enough and borrowing was expensive and unreliable. Enter William Paterson and a group of financiers, bankers and merchants with a radical idea. What if we created a permanent bank just to lend to the government in exchange for privileges? And in 1694, Parliament agreed. And the Bank of England was born with a loan of £1.2 million to the government of the day. That was an enormous amount of money at the time. And for most of its early life, the Bank of England was privately owned, deeply tied to government debt, and responsible for managing confidence in money. It began issuing banknotes, which initially were just promises to pay gold. And over time, people began to trust the notes more than the metal itself. And in money, trust is everything. And as Britain industrialised, the bank's role expanded. It became the banker to the government, guardian of the gold standard, a lender of last resort during a crisis. And during some of those financial crises, the bank learned a key lesson. When confidence collapses, liquidity saves the system. Sounds familiar? It's the same principle we've seen used time and time again. 2008 crash, COVID, and of course the 2022 gilt crisis. Different century, same playbook. But for most of history, the bank wasn't independent. Interest rates were influenced, sometimes very heavily, by the government of the day. And history's shown us time and time again what happens when politicians push money too hard. You get high inflation, currency weakness, cost of living pain. And the 1970s were absolutely a clear warning of this. So in 1997, the UK government made a massive change. The Bank of England was given operational independence. Politicians stopped setting interest rates. Instead, the Bank of England formed what's known as the Monetary Policy Committee, and they were tasked with controlling inflation, using the bank's interest rate or base rate as its main tool. And this involved making some unpopular decisions. But it was about credibility. Markets trust independent institutions a lot more than they do politicians. Every single base rate decision that the Monetary Policy Commission makes affects mortgage rates, rent, savings, inflation, house prices. The Bank of England doesn't exist to make life cheap. It exists to make money stable. And stability is really boring until you haven't got it. So from war finance to mortgage rates, the Bank of England has shaped and controlled your money for decades, whether you like it or not. I'm Patrick Weightman. I hope you've enjoyed dipping your toe in the murky water of the history of money, mortgages and insurance. If you've enjoyed this video, then give me a like or a follow and head on over to my main YouTube channel for more. Speak to you soon. Bye-bye.